Welcome to 55 minutes of serious business conversation here on Channels Television. It's Business Morning, coming to you live from Lagos. You're welcome. I'm Ini John Mekwa. Well, let's start from the global oil space, where prices took a breather today after surging to a 7-year high the previous session, as it became clear that the first wave of U.S. and European sanctions on Russia for sending troops into eastern Ukraine will not disrupt oil supplies. At the same time, the potential return of more Iranian crude to the market, with Tehran and world powers close to reviving a nuclear agreement, also kept a lid on prices. Brent crude rose 30 cents to $97.14 a barrel, while U.S. West Texas Intermediate crude futures also gained 30 cents to $92.21 a barrel. And that's after it hit $96 yesterday. Prices jumped on Tuesday on worries that Western sanctions on Russia for sending troops into 2 breakaway regions in eastern Ukraine could hit energy supplies. But the United States made it clear there would be no impact on energy exports. Well, we'll come to Nigeria now, going to the financial institutions industry now. KPMG, a global network of professional firms providing audit, tax, and advisory services, has released its 2021 scorecard on retail banks' digital channels. We have Boye Ademola. He's a partner and lead digital transformation at KPMG, to tell us their findings on the financial institutions in Africa, and of course, special focus on Nigeria. Good morning, Boye. Thank you so much for joining us.
Thank you. Good morning, Ini. Thank you for having me.
Good to have you. So tell us, why is this assessment important to start with?
Well, there's a big opportunity for retail banks to grow in Africa, particularly because we have a significant part of the population that is either underbanked or they are completely unbanked. And this is the same opportunity that is driving the growth of the fintechs in Africa. So our perspective is to serve this market. Banks will have to largely serve this segment of the market through their digital channels. And therefore, the channels really are the engagement mechanism for harnessing this opportunity. So the first point there really is around the growth opportunity. And very closely linked to that is this helps the banks from a competitive positioning perspective. It helps to see how they're doing in terms of their digital channels when they compare to other banks. We looked at 26 banks across Africa. And it also looks at their competitive positioning against the fintechs.
And so what are the findings, your major findings, especially as it had to do with Nigeria?
Well, the findings particularly show that banks continue to be quite strong on payments and transfers. We looked at 5 anchor journeys: digital onboarding, payments and transfers, digital lending, self-service, and customer care. And banks continue to be quite strong on payments and transfers. In Nigeria in particular, what we see two large groups of people. First, groups of banks. The first set of banks that we see are the banks we have categorized as leaders. And these are the banks that are showing strength in digital onboarding, particularly their ability to leverage technologies to onboard customers. Technologies like OCR, optical character recognition, technologies that help with document management, technologies that help with API so that they can offer products and services even to fintechs and with other FIs. The other thing that we've seen from the findings is that these banks are also quite strong from a lending perspective. They are beginning to lend by leveraging analytics. They're beginning to offer real-time credit scoring to customers. And they are quite responsive from a customer care perspective. Now, this is the first set of banks. We see a second category of banks that really are struggling, particularly in terms of their user journeys. They have convoluted processes. The journeys are not straightforward. They're not intuitive. and their channels infrastructure are not resilient. And again, this second set of banks are unable to onboard digitally. They are unable to respond, to customers in real time, as most of the digital natives will have you do. So really, we see two segments: banks that are really beginning to operate like fintechs. They are more agile, they are more nimble. And we're seeing a second set of banks that we've tagged as followers and late starters that really have to make significant improvements to be at par to seize this opportunity.
Maybe these are the groups of banks that the fintechs will overtake, because we know that the fintechs are giving the banks a strong competition this time around.
Yes, absolutely. So the second set of banks that I've spoken about, the followers and late starters, really have to rethink their approach. They need to be more intentional, because the fintechs really are looking at the opportunities that these same banks are playing in, and the fintechs are really looking to scale and to bring home those opportunities. So yes, you are spot on there.
All right, so we'll be watching this space to see how the competition goes between the banks using these digital channels and the fintechs trying to catch up with them. Thank you so much, Boye Ademola, partner and lead digital transformation at KPMG. Thank you for sharing your findings with us this morning.
Thank you for having me.
So the relationship between Nigeria and Ghana seems to be like a bittersweet one. Neighbors, similar language, and sometimes stiff competition between both countries, and yet there are opportunities, comparative advantages between both countries. We'll talk about that relationship after this break. Do stay with us. This is Business Morning on Channels Television. You're welcome back. Well, for the week ended 21st of February 2022, deals dropped almost 25% week on week, and that's on the FX commodity market summary, where we have joining us now Michael Martins, portfolio manager of FX, to tell us what happened and some other issues concerning that. Hello, Michael. Good morning.
Hi, Ini. Good morning. It is always a pleasure to be here.
Good to have you, Michael. So tell us what happened. We had a drop in the deals for the week.
Thank you very much, Ini. So if you look broadly at the table in front of you, just to give a bit of a summary with regards to what happened on the exchange in the week under consideration, the total value of transactions traded on the exchange went up by 78.44%, from 2.18 billion naira to close to trading week at 3.89 billion naira. The total number of contracts traded on the exchange went up by almost 30%, from 9.46 million contracts to close the week at 12.27 million contracts. The number of deals, however, fell by 23.84%, from 709 deals to close the week at 540 deals. We also saw a slight decline in the FX Commodities Index, which is the ACI, which fell from 494.77 points to close to trading week at 481.87 points, to lose 2.61%. The FX Export Index, the AEI, also fell ever so slightly by 0.46%, from 195.65 points to close the week at 194.75 points. With regards to the volume of contracts traded on the exchange, like I said earlier, there was a 29.73% increase, with a major increase coming with soybean, which traded up from 189,000 contracts to close to trading week at 4.36 million contracts. Paddy rice also went up from 877 contracts last week to trade over 1.4 million contracts this week. With regards to the decline in volume, maize fell from 8.83 million contracts last week to trade just 5.86 million contracts this week. And sorghum also fell by 429,000 contracts last week to close this week at just 196,000 contracts. With regards to the price changes on the exchange, we only saw an increase with cashew, which went up by 8.12%, gaining 49.19 naira in the contract value to close the trading week at 654.91 naira. The other commodities lost value, with maize being the biggest loss, losing 2.51% to close the trading week at 241.85 naira per kilogram. Soybean also lost 0.19% to close the trading week at 409.14 naira per kilogram. And lastly, but certainly not least, we have paddy rice, which fell by 1.02% to close the trading week at 227.99 naira per kilogram. Some other commodities also lost value, but their losses were marginal over the course of the week. So that's largely most of the changes that we saw on the exchange in the week under consideration.
All right, so from a historical data, what effects does the dry season harvest for grains have on commodities prices?
Thank you very much, Ini. So if you look at the dynamics that very often play out in the commodities market, we have mentioned how there is a wet season cultivation and there is also a dry season cultivation. But the first thing you must note is that the dry season cultivation doesn't cut across board. It only applies to a few commodities, the biggest of which would be, of course, rice cultivation, which tends to start around December, tending towards January. We also have a bit of maize cultivation in certain areas. And then lastly, but certainly not least, we have wheat. With regards to its impact on price, there is very little to no effect in terms of the production volume that comes out, particularly for rice. I must also say here that for rice in particular, the yield per hectare is better during the dry season than it is during the wet season harvest. But why the dry season is important, and I must say this, is because the dry season cultivation, the volume that comes out during harvest, acts as a buffer, for the demand that is very often available in the market. So what this prevents is it prevents from us having an over demand for the next commodity, cultivation cycle, which tends to happen around, of course, like you're all well aware, the month of November and December. So because of the production that we have, during the dry season, that production buffers the demand that is available in the market, such that during the next harvest cycle, we don't have that big of a demand having that big of an effect, on price. But like I said, dry season cultivation only applies to a few commodities, and even at that, it only has a marginal effect on the prices of commodities in question.
And then what's the current performance of the FETCs on the exchange?
Thank you. So the FETC has done fantastic this year. The FETC1, which comprises of maize, sorghum, and soybean, has gone up by more than 25% already from season till date. And also for the FETC2, which comprises of only maize and sorghum, has gone up by more than 5% this year already. And you must remember that initially why we designed this product was for it to act as a middle ground between the fixed income products that are available on the exchange and then also the spot contracts. So yes, the FETC has done fantastic this year, and we do expect that trend to continue for the rest of the commodity trading season.
All right, Michael, thank you so much. I think we have to switch the conversation now. Thank you so much, Michael. It was good having that summary
You're
with
welcome,
you.
Minnie.
So in other happenings with AFEX, the Africa Tech Summit kicks off today, drawing in unrivaled insights, networking, business opportunities, and it brings together tech leaders from African ecosystem and international players under one roof. AFEX would be holding a side event to discuss the impact that technology has had on the trade infrastructure, from creating better market opportunities for producers, easing participation for various levels of investors in supply chain activities, and increasing transparency and security for players on both ends of the market. Well, we have Oluwafunto Olashemo, the Vice President, Financial Markets at AFEX, to tell us what AFEX is doing here and what we should expect from them. Hi, Oluwafunto, good morning.
Hi, good morning. How are you doing today?
Good, good, good. So in discussing how technology can impact agriculture, what are the critical touch points to pay attention to?
Oh, thank you very much for the question. The impact of technology on the entire agricultural ecosystem is something that I personally am passionate about, and I really love to discuss. But to help us fully dimension the impact of technology on the agricultural landscape, it is important that we look at the agricultural sector as a value chain system where all the processes needed to take agriculture from commodity or from the production to consumption are tightly integrated. And what do I mean by this? We talk about the pre-planting activities up until the production of the commodities to offtake, processing, and ultimately the marketing of the commodities or the product. There are a number of critical touch points to pay attention to. in discussing the impact of technology on agriculture, and one of them is improving agricultural productivity. As you're aware, more than 80% of crop production in Nigeria and in Africa at large are being done by smallholder farmers. And it is important for you to dimension the challenges that hinders their productivity vis-a-vis and limited access to quality input, limited access to land for cultivation, limited access to credit facility. I always say that farmers are highly bankable. The challenge has always been, who are these guys? Creating some sort of form of identity for these farmers and to understand their operations vis-a-vis what are they planting, what volume are they doing, and what are their credit history like. Ability to then harness all of this data together would help channel and position the right technology solution to help increase and improve agricultural productivity. Also, it is important to also talk about access to market and finance generally. Statistics has shown us that the financing gap in Africa generally is about $65 billion when you talk about agri financing gap, right? However, in spite of what this gap essentially says is that there's opportunity for money to be made. But in spite of this opportunity, a lot of financial institutions and fund providers are seriously averse to providing the needed credit. And this is because of this lack of transparency coupled with information asymmetry. What technology can then help us do is that it can help create transparency by exposing to the fund providers the data they need to do the necessary analytics and to also then foster the flow of finance into the sector. And we could also then leverage on big data analysis that would then query data, identify trends, and test assumptions. Another thing, critical touch point when you're looking at access to finance and market is then to talk about the blockchain technology, where you can then enhance distribution of data and transparency of data. Ultimately, the goal of making the agricultural sector transparent through technology is to increase the flow of fund to the sector and then help the value chain participant to be able to access the necessary finance and market. Again, just as I mentioned, understanding the landscape means that you have to understand that the various operations within the agricultural sector don't act in isolation. So it is important that a critical touch point is integrating the value chain, which then makes all the geographically dispersed producers of this commodity come together into an ecosystem that then eliminates the middleman who has been the one that has favored the most from the entire value chain. And then technology can then help to smooth the market gap, bring the producers of these commodities and the consumers of these commodities together.
All right, so the convergence of agriculture, technology, and finance has been a conversation for a long time. I mean, how do you think that this can disrupt agriculture trade infrastructure?
Thank you very much. Very interesting question, I may say. And so in terms of at Effects, our thoughts and what we are doing in ensuring that agricultural trade infrastructure are disrupted by technology is the fact that technology can help unlock the full potential of the agricultural trade by improving the efficiency in our ports and our customs. And this would ultimately reduce the cost of doing transactions, because then you can leverage on technology to provide a suitable avenue for clearing and settling of this transaction. Also, the time you spend in clearing some of these activities, if you have a central payment and settlement system that leverage on technology, it reduces the turnaround time for the payment of trade or settlement of trade intra-African, particularly intra-African trades, and it ultimately reduces the cost of doing trade within the country and across the country. In addition to that, I did mention about blockchain technology. Blockchain technology can actually introduce some level of transparency, and this can be leveraged on to create innovative financing that would ultimately disrupt the agricultural trade infrastructure.
What are some of the challenges that Effects has had to face in trying to foster the collaboration between these three sectors?
As you're aware, Vision at Effects is to be the reference point for commodities exchange in Africa. And what this means is that Effects is building lots of physical and technology-enabled infrastructure that would provide access to market and unlock capital for smallholder farmers, processors, and export operators, right? But all of this would not even happen without us facing certain challenges. And one of a few of them is, number one, would be that for you to set up physical and technology-enabled infrastructure, there is a large capital outlay that is required to kick off the initiatives and to put the framework in place. I'll give you a very classic example. In gathering data, as of today, we have over 500,000 smallholder farmers information in our database. We collect market data across 200 markets. For you to be able to do that, for that data collection, analysis, and distribution, it requires a lot of manpower deployment, and that comes at a very huge cost. So the large capital outlay to kick off some of these initiatives is a major challenge that we are facing. And because we're a private entity, right, then begin to look at it in terms of what level of data should you be gathering and how will it profit your operation as an organization. Another challenge that we face is how do you then manage the capacity of the end user with the sophistication of the solution you're providing. Again, just as I mentioned, a number of the producers of these commodities are smallholder farmers that have very little or limited education. And you have to create technology that are written in English and that would be accessed by technology platforms like mobile platforms. Right? So how do we then merge the capacity of an Hausa man that does not speak English? How do we translate the functionalities on this solution to something that he can relate with is another challenge that we face. There's also market sensitization and orientation, particularly with the capital market operators. Most capital market operators, the equity market is very mature, the fixed income market is very mature, but the commodities market is still growing. So there's a lot of capacity building and orientation that we need to do with the capital market operators to help them understand the entire process of securitization and how commodity can be leveraged as financial instrument for capital gain. Last but not the least that I would like to talk about are regulatory bottleneck. And permit me to say that regulation is very important in giving confidence to participants in the market. However, globally, regulation is always known to be behind innovation. And a lot of times, these tend to be major challenges when you're then creating and developing product that you need to take to market, because you then need to begin to do things within the framework of regulation. And then that tends to slow down the development and the ultimate go-to-market of some of the innovations that we're bringing to bear.
So I can tell that, Oluwafunto, you're very passionate about this. But very briefly now, because we're almost out of time, could some policy directions be developed to promote the convergence of agriculture, technology, and finance in order to increase agricultural productivity? If you have a few policy directions, just very few, because we're almost out of time.
Yeah, so absolutely. Again, it is the role of the government and regulatory and agencies to support and create an enabling environment for entities like AFEX to thrive in what they do, right? And some of the policy points that can be created within, for me, I am very big on data. There has to be policies around data collection and distribution. The challenge with data in Nigeria, it's not like some of these data are not available, but a lot of them are available in isolation. How do we then create an environment where data can easily be shared in order to leverage on what someone already has done, then to build on top of that, rather than recreating and reinventing the wheel each time we need to create a product. There's also the policy direction of having to create schemes that will promote the inflow of funds from the capital market into the agricultural sector. The infrastructural requirements for the agricultural sector is huge, and a lot of times policies and schemes from the government is the only way to float and implement some of these infrastructural needs.
All right, Oluwafunto, thank you so much. I'm sure this is a continuous conversation. This is not the end. And of course, when we finish with the conversation, we'll talk about implementation of it. Thank you so much for sharing your thoughts with us and what you were doing at AFEX. Oluwafunto is the Vice President of Financial Markets at AFEX. Thank you so much. We'll take a break now. When we come back, remember that conversation on Nigeria and Ghana? That's where we're going to next. This Stay With Us is Business Morning on Channels Television. it's now time to do an opening call to the market. It's been a green week so far, Will.
Well, according to what we're seeing in the market, yes, it's been a green week. But yesterday traded moderately positive compared to yesterday on Monday's posting of 0.2%. We had 0.03% yesterday at 47,246.90 points. Now, the equity cap, like I said, as I said yesterday, is still at the 25 trillion naira mark, and we're hoping that it remains there. Now, investors were very much interested in GTCO, which boosted the market performance amid the sell-offs we saw in Guinness, which was down 5.3%. Now, the month-to-date and the year-to-date gains have remained at 1.3%, and the month-to-date gain is inching downward. We're hoping it doesn't get to the zero level, and the year-to-date gain is still at 10.6%. Now, total volume traded yesterday advanced by 0.1% to 421.86 million units. Now, the value was 5.2 billion naira and exchanging 6,993 deals. Now, we saw a green activity chart there. That means that a lot of deals, a lot of transactions happened yesterday. United Capital still shining there, was the most traded stock yesterday by volume at 66.1 million units, while Zenith Bank was the most traded stock by value. It was at 1.39 billion naira. Now, looking at the sectors, we see that the banking, consumer, and insurance goods sectors, insurance sectors were down yesterday. Industrial and oil and gas were in the green, but they were almost flat. Well, they traded relatively flat yesterday. Move quickly to the NASD market, the unlisted equities market. We see that traded in opposite direction of the listed equities market, 0.05% down at 738.06. Now we move to the fixed income market, where bullish sentiments persisted yesterday. Buying interest was seen at the short end of the maturities. Average yield dropped by 17 basis points. Now, especially for the 2026 paper, it closed at 10.3%. Now, we have Ifeoma Onyejekwe, fixed income dealer at UBA, to tell us what really happened, what's happening at the markets, general sentiments like that, and give us, an outlook for what to expect for the rest of the week. Good morning, Choma. Good morning, Ifeoma.
Good morning. Thank you for having me today.
Well, a bit of too much coffee this morning, I guess. Now, so Ifeoma, tell us what we're having in the market, especially general sentiments for investors, because we're seeing kind of like a lull, especially for the NTB section, that's the Treasury bills market. What's going on there?
Well, yes. Yesterday was quite bullish, but today, like you rightly said, there has been a lull in the market because of the NTB auction. So market consensus is for stop rates at the long end of the auction, that's the 365 days bill, to be around 4.9% levels. Last stop rate was 5.2, but because of there's so much liquidity in the market, so we've been seeing a lot of bullish sentiment. We also expect stock allocation payments to come in today. If it doesn't come in today, then it will come in tomorrow. And yesterday we saw maturities being paid in close to 230 billion, and tomorrow we expect NTB maturities. There's also bond coupon payments of 59.55 billion coming in today. So this excess liquidity in the market has caused market players to look for where to plug in their funds all over the place.
So what do you think, what do you expect the markets, investors to do, seeing that you're saying a fact is going to come in and the OMO maturities yesterday? How's the liquidity in the system, where's it going to go? Where are they going to fix take positions?
Right now, we're seeing lots of bids for the NTB auctions today. So we expect subscription levels to be very, very high. We also expect same high subscription levels for a possible OMO auction tomorrow. So investors will likely close the week on a very bullish note, because we know that the central bank will not be able to meet the subscription levels. So we see that those that don't win at the auctions will come into the secondary market to buy more. So we expect this week to also close out bullish.
Now, so you're talking of bullish sentiments. We're seeing a continuous drop in rates. Is there not a concern for investors still putting their money where, though I know it's a safe haven for investors, but what is the return for them? What's the gain? Why do you think they're still in the market? We're seeing equities, there's corporate earnings coming in. Are they not moving over to equities?
Not necessarily, because that investors will likely prefer safe and stable assets, especially if you look at the age of people investing. We know that the older you get, the more you likely put your funds in fixed income assets like bonds and treasury bills rather than the equity space. So we're seeing it's better for investors for now get in while the market is hot, because we expect yields to reduce further as we go on later in the year. So now it's relatively high. That's why we're seeing a lot of investors putting their money, especially with the huge number of liquidity coming in. But maybe later in the year, they probably move more into the equity space.
Thank you so much, Ifoma, for that insight. Ifoma Yejekwe, fixed income dealer at UBS. So, Ini, we're back to today and expecting that maybe the auction that's going to take place and tomorrow's auction, we want to see how investors really put their monies, because there's so much liquidity in the system and they're trying to mop it up. One way investors are trying to find good returns for their investments, and other ways we're seeing that the rates are dropping continuously, and then we're hoping that this is not going to cause so much of like, maybe they're going to move their portfolio to equities, and maybe that's going to boost equities performance, because I'm looking for that to be
There's so many opportunities for investments, it's just investors are just being very careful.
True.
Because you don't want to take a decision and then instead of boosting your income, you're now reducing your portfolio. Yes, we do know that the issue of the liquidity in circulation is one hand, but I mean, for an investor, you always want to increase what you have.
Yes, I was speaking to an analyst and he was telling me, oh, well, it broke, and he was telling me, oh, wow, I looked at the fixed income space and he said, oh, good, great. That means equities are still going to be doing great. So equities is probably the place to be if we have the risk appetite. Depends on how much risk we can take on. And so
because, I mean, we've been talking about attracting and boosting our local markets, and instead of waiting, for the FDIs, for the foreigners who would come and then at the whim, or just before you know it, they just take their liquidity out and then the market goes down and we cannot really explain it. So, I mean, it's a safe place.
And with MTN coming in with the trading, that really boosted, brought in a lot of young people into the capital market, especially from what I've heard from record level.
It's been a conversation for a long time.
True.
I mean, I remember having this conversation, I think, on capital markets some time ago. If you want to buy shares or anything, you have to go through filling this form and go through this process. And so why don't we make the process, if we want the new generation, the Gen Zs, or to come on, then you have to make it easier to enter and exit, and then people have more confidence in the system,
People have been wondering, okay, like you mentioned that the Gen Zs and the older ones are wondering, oh, what about us who bought MTN when it wasn't, on the E-platform? What about us? How do we find out what's happening now?
You can upgrade. Well, thank you so much, Will. Thanks a lot for that update in the market. We would like to let you know that we've been trying to get the Consul General of Ghana, Madam Samata Bukari. She's supposed to have that conversation with us, discussing Nigeria and Ghana trade ties, having a bit of technical issues. We hope we'll be able to resolve that, and if not, we'll certainly bring her on the program in subsequent episodes of Business Morning. We'll still try and see if we can get her. She's currently in Accra, Ghana. I don't know if it's the time difference, but we're trying to get her, just having a bit of technical issues. If we can't get her today, we'll certainly bring her to you to have that conversation on Nigeria-Ghana trade ties. For now, we'll take a break. When we come back, Business Morning will continue as we head to London. Do stay with us. Yeah, welcome back. Let's go to London now. We have Juliana, and it seems the whole world is looking and talking about Russia, the conflicts, and now sanctions, threats of sanctions. I think we have some from the UK. Hello, Juliana. Good morning. So I think the UK have sanctioned some companies and individuals already connected to this.
Yeah, they have. Good morning, Ini. Unlike every other country in the world, in the West, the UK has an outsized ability to inflict economic pain on Russia because there is just so much Russian money here. There are about 33 Russian companies that share a dual listing on the London Stock Exchange with a market capitalisation of £500 billion. So some of the measures that were outlined by Prime Minister Boris Johnson yesterday in the Palace of Westminster don't go far enough, but we do have some details. There are 3 individuals that have close contacts with the Kremlin. One of them is a Gendali Timchenko. He is a major stakeholder in Rossiya Bank. This is a bank that allegedly is used by Putin, a very close ally of his, according to the Foreign Office. There's also the 65-year-old billionaire Boris Rotenberg, who is the co-owner of Russia's largest pipeline. He has been sanctioned, so it means there is an immediate travel ban to the UK, and all assets in Britain have been frozen. His nephew, Igor Rotenberg, also a huge industrialist, very well known here. He's also one of those 3 individuals that have been sanctioned, along with those 5 banks. However, I think MPs across both sides of the House don't think this goes far enough. Again, we're seeing a very tepid response from Prime Minister Boris Johnson's government, who have received millions of pounds of donations from Russians in recent years. So there's a lot of big talk out of the UK at the moment. Are they going to go further? What message are they sending to Putin? That's what analysts are trying to decipher at the moment. But yes, there's still a lot more that the British can do in their arsenal. Are they going to do it?
Yeah, well, you can say that again, because I think when I read a comment, you know, connected to this, and somebody was like, well, is that it? Is that all Britain is going to do? Well, we'll wait and see if they're going to do more. But does this have anything to do with the petrol prices, which is set to hit 150p a litre soon?
Well, absolutely. It's all about, the markets are really focused on what's happening on the Ukraine-Russian border at the moment. We saw that oil prices surged, the highest that they've done since 2014, when Russia annexed the Crimea. Brent crude, which is the benchmark, that was trading at nearly $100 per barrel. This is certainly having a direct impact on petrol prices. Then, of course, we had that surprise announcement yesterday by the German Chancellor Olaf Scholz, saying that he would be suspending any further negotiations around the completed Nord Stream 2 gas pipeline. So gas prices shot up by about 10%. So yes, everybody's watching and waiting. The markets appear to have started off at a good pace this morning, but lots can happen. We're still waiting to hear from the Russian foreign minister and his British counterpart, Liz Truss, here in London. So we'll keep you posted, Innie.
Sure, we'll be following that story. We have you as our eyes there. Thank you so much, Julian. I'll talk to you at 1:30.
Thank you. Thank you.
So I think we're able to get the Consul General of Ghana, Madam Samata Bukari, on the phone now. Hello, Madam Bukari. Good morning. Can you hear me?
Hello, good morning.
Good morning. So just give us an update. You know, this tension between Nigeria and Ghana, especially with the traders and business people there. What is the update? What's going on now? How is the feeling now?
In fact, you are not, I can't hear you very well. But what I've heard is trade between Ghana and Nigeria. Am I right?
Yes, you're right. Go ahead.
Yes, trade between Nigeria and Ghana is being improved day in, day out. Just a few days ago, there was this forum between the CEOs of Ghana, GIPI, GEPA, that is Ghana Investment Promotion Council, Association of Ghana Industries, Ghana Export Promotion Council. They were all in Nigeria to meet with the Lagos Chamber of Commerce and other agencies in business and trade to discuss ways and means that they can improve on trade between Nigeria and Ghana. I was part of the meeting and it was very fruitful. The attendance was great and deliberations were very, very, very useful. That was just a few days ago, back in Nigeria. We expect that it will continue, such meetings will continue in order to enhance and facilitate trade between Ghana and Nigeria, particularly with the captains of industry, that is the private sector.
All right, so Madam Bukari, thank you so much. for bringing us up to date. I would have loved to do more, but I'm sure we'll do that in the nearest future here on the program. And just before we run out of time, let's just slip to the crypto segment where Ladi has been patiently standing by. Ladi.
Yes, so anyway, we're getting quite a bounce this morning. Some recovery in the market, but it's still extreme fear at 25 points this morning in the market. Checking the fear greed index. Market cap, $1.72 trillion. That's inched up about 3.95% this morning. Volume traded in the total crypto space, $78.03 billion. That's down about 27% this morning. Bitcoin dominance sitting at 41.76%. Price of Bitcoin did get that bounce above that 38,000 to $38,012, up 3.07%. The bears are still trying to get this price down to that 35,000 to start another downtrend, but I see the bulls fighting back there this morning. Volume traded $23.23 billion, and we see Ethereum still trying to get back at that $3,000 mark. It's $2,600 this morning, up 5.2%. Volume traded in Ethereum, $14.58 billion. So there's some action going on in the market from yesterday's major sell-offs. Let's bring in Solomon Amunde now. I think we have, so hello, Solomon.
Yeah, good morning, Ladi.
Good morning, Solomon. Well, we're having a bounce this morning. Is it a dead cat bounce, or can we expect, some kind of uptrend from here?
Yeah, we can't really say if it's an uptrend yet because we're still trading below $40,000. So I would see it as a trap, basically, and I won't be going in yet. I'm still waiting for Bitcoin to make a retest of about $32,000 because that's still on the horizon.
All right, but what altcoins are you watching at this point?
Yeah, I actually got into Sand yesterday because Sand dropped to about $2.9. And this morning I got into CHR Chromia at about 38 cents. It's still looking pretty cheap. Right now it's at 40 cents. So those are just the two projects.
Hello, Solomon.
I'm looking at.
Okay. All right, Solomon. Thank you so much.
Yeah, I can hear you.
Yeah. Okay, thank you so much. We'll keep watching, if this bounce actually works, and maybe some altcoins might actually get some action. Thank you so much, Solomon. Well, top also market cap there, we see BNB, it's up 5% at $376. Cardano did lose that $1 mark. It's at 90 cents now. It's up 8.62%. And we're seeing a bounce with Solana there at $89, still trying to get above $100. And we see XRP at 71 cents, trying to get back to 80 cents, up 3.69%. So it's a relief bounce this morning. Some traders are getting a little excited at this point, but it's still extreme fear in the market.
Yeah, Solomon called it a trap. Is that what he called it?
Yes, it's calling it a bull trap.
All right, thank you so much, Ladi. But I do remember that Channels Television does not advertise cryptocurrency or encourage you to go into it. We just report the market. That is what we do on this segment of the program. And don't get carried away. Channels Television would not approach you to get into it or buy any cryptocurrency. That's it. Thank you so much for being a part of the show today. 1:30 we'll be back with updates from the world of business. And then tomorrow, Business Morning, will be back with more current business talk. So stay with us and join us then. I'm Amy.